I recently read an article about leveraged ETFs. Would you say that this could be a good investment opportunity for young people? Because leveraged ETF means that let's say, your risk increases. You invest into the, let's say, S&P 500 firms
Yeah.
with leverage. Before, let's say I'm 21 years old, and if I would be to hold this ETF for, let's say, 20 years, that could be a great investment opportunity. But is this something for a small time young investor?
Yeah. A good question, a very good question. I had been manager of the world's largest derivative fund 20 years ago. So I have a little bit of know-how about how to construct leverage products and portfolio. And the crucial question is about implied volatility. What are the costs for the leverage and the counterparty risk, which is equally important. Look, if you have a bright idea investing in such a product, and suddenly your counterpart is not existing any longer, and especially if you are thinking about an investment for the next 20 years, have you a clue which financial counterpart is still existing in 20 years' time? So the very first job is to check what is the medium-term economic outlook of my counterpart. If, for example, such a product would be issued by Amazon or Alibaba, I would argue, well, that risk is not too big. If such a product is issued by a bank, I would be a little bit more nervous. Well, you are debating about a leveraged call ETF. So maybe the risk of a bank to break under such a scenario is not as big as if you are thinking about the leverage put ETF. Here, certainly the counterparty risk would be something I terribly would try to avoid. So if you have done your research or based on the counterparty and you think the counterparty will stand for the next 20 years, then it's a question of implied volatility. What amount of implied volatility are you paying with the product? And my argument would be, if you are able to buy such a product with an implied volatility between 12, then on an historic average, it's attractive. If you have to pay more than 17, I would think it's too expensive. That's just my subjective numbers, which are just a function of my experience in the derivative market. But it's not only about taking a leverage product based on your idea. Well, I want to have more risk because I'm young and my cash flow streams are going to increase, which is a very smart and a very good idea. No, it's only also about the question, what do I have to pay for that? And interesting enough, most investors are not thinking along that line because they are not able to evaluate what are the costs of the product.